Ladies and gentlemen, good day and welcome to the GNG Electronics Limited's Q3 and 9-month FY26 earnings conference call. This call may contain forward-looking statements about the company that are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Avinash Karumanchi from Motilal Oswal. Thank you, and over to you, sir.
Thank you, Darwin. Good evening, everyone. On behalf of Motilal Oswal Financial Services, I welcome you to Q3 FY26 earnings call of GNG Electronics. Joining us on the call today are Mr. Sharat Khandewal, Founder and Managing Director, Mr. Ajay Pancholi, Director, Mr. Rakesh Jhunjhunwala, CFO, and Mr. Rohit Agarwal from MD's office. I'll now hand over the call to Sharatji for his opening remarks. Over to you, sir.
Thank you, everyone. I welcome you to the third earnings call of GNG Electronics. Q3 FY26 has been another strong quarter for us. The business delivered robust growth along with a clear improvement in profitability. Revenue grew by 40.3% year-on-year, and profit after tax more than doubled compared to the same period last year. This performance reflects consistent execution across sourcing, refurbishment, and sales, and it builds on the momentum we have been seeing over the past several quarters. What's particularly encouraging is not just how fast we are growing, but how well we are growing. As volumes have scaled, margins have improved, and profitability has grown faster than revenues. This clearly demonstrates the operating leverage inherent in our business models. Let me now share a few updates on the broader industry. The global technology landscape continues to evolve in a way that is increasingly favorable for the refurbished PC segment. Over the past few quarters, rising memory and storage prices have begun to materially impact both the cost structure and availability of new PCs. Some of you may recall that during our roadshows in July last year, I mentioned that by the end of 2025, AI adoption and real-world use cases would be meaningfully higher. That expectation has clearly played out. As AI adoption accelerates, investments in AI infrastructure have surged. A growing share of global memory manufacturing capacity, especially high bandwidth memory, HBM, is now being diverted towards AI and data centers. This shift has tightened supply for conventional DRAM and storage used in new PCs, and prices have risen sharply as a result. To put this into perspective, as DDR5 8GB RAM prices increased from $23.35 on 1st October 2025 to $86.61 by 1st January 2026, nearly a 270% increase. Similarly, DDR5 16GB RAM prices rose from $54.85 to $189.99 over the same period, a 3.4 times increase. These are substantial increases. These increases inevitably will flow through to the pricing of brand new PCs globally. Also, according to IDC, global new PC shipments stood at about 284.7 million units in 2025. Against this backdrop, IDC estimates that shipments in 2026 could decline by up to 8.9% due to memory shortages and rising prices. This environment is naturally driving higher acceptance and penetration of refurbished PCs driven by affordability and availability. Adding to this, IDC also notes that nearly a quarter of global PC shipments come from manufacturers outside the top 5 brands. Many of these players are likely to face significant challenges in accessing memories, even at elevated prices. This could lead not only to higher prices but also to outright supply shortages in new PCs, further accelerating demand for refurbished systems. We are already seeing the impact. New PC prices have increased by roughly 20% so far, and we expect further increases ahead. This is clearly shifting customer preference towards refurbished PCs and expanding the total addressable market for our industry. We fully intend to capitalize on these favorable tailwinds. As a result, refurbished PCs are playing an important, increasing role in meeting global computing demand, especially for enterprises and institutions that value faster deployment, reliable performance, and cost efficiency. Customers are increasingly recognizing that refurbished systems can meet the needs without compromise. We have seen similar transitions in other industries as well. In mature automotive markets, used car sales are more than twice the volume of new car sales. In smartphones, refurbished devices have grown from a niche segment to a meaningful share of global shipments. The PC market is now following a similar trajectory as devices become more expensive, technologically stable, and longer lasting. Against this backdrop, our focus at GNG has remained very clear: secure supplies well in advance, execute refurbishment efficiently, and ensure continuity for customers across geographies. This disciplined execution has enabled us to consistently meet demand even as market dynamics continue to evolve. Overall, our Q3 performance reflects the strength of our execution in a changing industry landscape and positions us well as customer demand patterns continue to shift. Let me now turn to some company-specific updates. One of our most important developments has been the continued validation of our model. Devices refurbished by GNG deliver an experience that is as good as new, both in terms of performance and aesthetics, at roughly one-third the price of a new device. This is backed by a credible and proven warranty of up to 3 years. This powerful combination of quality assurance and affordability continues to resonate strongly with customers and is driving both top-line growth and margin expansion. Our warranty framework is now well established and remains unparalleled in the industry. 3 years in India and 1 year across international markets. This has significantly strengthened customer confidence, which is reflected in higher repeat orders and wider deployment of refurbished systems for long-term use. I would like to mention that we pioneered this concept of warranty to increase reliability in refurbished computers refurbished by us. On the international front, we continue to expand both geographically and in terms of depth. Today, we supply to 44 countries, supported by more than 4,745 customer touchpoints across enterprises, institutions, distributors, and channel partners. As this footprint grows, repeat business is increasing, reinforcing the growing acceptance of both refurbished computing and Electronics Bazaar brand globally. We have also initiated targeted digital outreach programs, particularly in the US, and are extending similar efforts in India. These initiatives are helping improve brand visibility, deepen customer engagement, and strengthen our sales pipeline. To support this growth, we have continued to invest in our people. During the quarter, we strengthened our senior leadership, middle management, and engineering teams, ensuring that the organization remains well equipped to scale sustainably. I would also like to highlight that nearly 100% of our sales are now under our own brand, Electronics Bazaar. This reduces dependence on external brands, strengthens customer recall, reinforces trust, and supports long-term value creation. I am happy to report that devices refurbished by Electronics Bazaar carries specific premium and distinct positioning in the market. Finally, given the ongoing memory shortages and rising prices of new PCs, we believe it is critical to maintain elevated inventory levels. This ensures continuity of supply for our customers and is essential for sustaining both sales growth and margin expansion during this period of structural supply constraints. In summary, we believe we are well positioned to navigate the current environment and to continue delivering strong, high-quality growth in the quarters ahead. I would like to hand over now to our CFO Rakesh Ji to speak on the performance of Q3. Thank you all very much.
Thank you, Sharji. Good evening, everyone. Happy to inform you all we have had a Q3 reflects another quarter of consistent execution and disciplined growth of GNG Electronics with a clear improvement in profitability alongside strong revenue expansion. During the quarter, consolidated revenue increased to rupees 4,872.2 million, representing a year-on-year growth of 40.3%. Growth remained broad-based driven by steady demand and continued traction across both domestic and international markets, particularly Middle East, the United States, and Europe. Operating performance continued to improve as EBITDA for the quarter stood at rupees 545.7 million, with EBITDA margin expansion to 11.2% from 9.2% in Q3 FY25, translating into a strong 200 bps increase. This improvement reflects efficient cost absorption and disciplined execution as the business scaled. Profit after tax has more than doubled to rupees 386.9 million in Q3 FY26, while revenues grew by 40.3% year-on-year, supported by margin expansion and operating leverage. PAT margin for the quarter stood at 7.9% compared to 5.5% in Q3 FY25. On a YTD basis, we have delivered 30% year-on-year revenue growth, along with a 157 bps improvement in PAT, reflecting the strength and scalability of our business model. Thank you.
Thank you. I now hand the conference over to Mr. Ajay Pancholi. Over to you, sir.
Hi, good evening, everyone. Thanks once again and welcome to the conference call for this quarter update. I would want to highlight a few important points for your consideration. First being that today we supply to over 44 countries, which was about 38 countries at the beginning of last year, and has in fact moved from 35 countries to 45 countries in the last 12 months. So that has expanded our outreach and acceptability of our products across different geographies. Second aspect worth highlighting is on the distribution front. We are now supported by over 4,745 customer touchpoints across enterprises, institutions, distributors, and channel partners, which was about 4,150 at the beginning of the year. Just from a capacity perspective or a throughput perspective, it's important to highlight our employee strength has increased to over just about 1,900, which was about 1,194 at the beginning of the year, and which was 1,500 at the beginning of the quarter. So importantly, it's worthwhile to highlight that we have added over 600 engineers and also substantial strength has been added to the sales and marketing team. So this lays the foundation for the growth that we have delivered and which we envisage to deliver over the next couple of quarters and going forward. The fourth important point I would want to highlight is as related party transactions. We currently have no related party transactions within the group other than the sales that happens to our 100% subsidiary. So there is no. The reason why I'm highlighting this is that this was one of the important points during the time of our IPO, and hence for your consideration, I'm highlighting this aspect. And the fifth point, which I would want to add, is on the warranty cost, the treatment and provisioning norm that we are taking the way forward. The warranty cost is accounted for as part of cost of goods sold and is therefore already factored in our reported gross margins. As indicated earlier, the warranty cost has been in the range of 10 to 12 basis points, and which we account for on a regular basis through our P&L. Warranty costs continue to remain structurally low, supported by our in-house refurbishment processes, quality controls, and post-sales service framework. Additionally, as a matter of prudence and conservative accounting approach, the company has made a cumulative provision of 1.3 crores over and above actual warranty costs incurred to date to our P&L. So this is an incremental provision that we are taking, and we will continue to enhance this provision over a period of time as the scale continues to grow. On this note, I would want to hand it over to Sharadji, who would want to make a few incremental important updates for your consideration. Over to you, Sharadji.
Am I audible now?
Yes, Sharadji.
Am I audible now? Hello? Hello? Am I audible now? Yeah, so I would like to make a statement.
I would like to make a statement on. Am I audible? Yeah. So I would like to make a statement on our sales channel organization.
Can the operator confirm, please? Can the operator confirm if Sharadji and I am live?
Ladies and gentlemen, we thank you for your patience. We have reconnected with Sharad, sir. Sir, you may proceed.
Yeah, thank you. I would like to make a statement on our sales channel augmentation. In furtherance our objective to strengthen distribution reach and make our products available across the length and breadth of India, including Tier 2, Tier 3 cities and emerging towns, we have entered into two separate strategic partnerships with leading technology distributors. We have partnered with one of the world's largest technology distributors and the second largest distributor in India, and separately partnered with fifth largest technology distributor in India. While we continue to scale our existing channels, these partnerships significantly enhance our ability to address the growing demand for value-driven and eco-conscious technology solutions from large enterprises, SMEs, education institutions, and other consumer segments. Importantly, the fact that these two distributors, who have traditionally been focused primarily on the distribution of brand new computers, will now also distribute our refurbished products, demonstrates the increasing acceptance, scalability, and long-term potential of the refurbishment industry in general and Electronics Bazaar, GNG Electronics in particular. We have consistently maintained a strategy of non-dependence on any single customer or channel, and these additions further strengthen the resilience of our distribution model while enabling deeper market penetration. As you can imagine, distributors of this scale and reputation partner only with the companies that have strong credibility, proven processes, and an established track record. We believe the decision to partner with us independently is a strong validation of our product quality, warranty framework, and overall value proposition. We are honored to partner with both these very large distributors and look forward to scaling these relationships meaningfully over the coming years. The secondary reuse market, including refurbished market, is growing rapidly across the globe, and reliable, good quality devices are much in demand and will continue to keep increasing. I would like to speak on the guidance. As a result of the industry dynamics that I spoke in the beginning of this call and the execution momentum we are seeing, the company has strong visibility and growth. While we had earlier guided for approximately 25% year-on-year revenue growth, we are revising it upward to 28 to 30%, along with an improvement in profitability of around 150 to 200 basis points compared to the earlier guidance of approximately 75 basis points for the whole year. We remain focused on disciplined execution, prudent decision-making, and closely monitoring market conditions as they evolve. Our objective continues to be building a resilient business that can deliver consistent growth and profitability across cycles. Thank you all very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Manish Ostwal from Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity and congratulations on a good set of numbers. Very strong set of numbers. So, sir, can you tell us the total volume growth in the business in 9 months versus last year 9 months?
Yes, sure. So the volume for this quarter was about 186,000 units, which was spread across laptops and others in the proportion of 83% and 17%. So to be precise, the number was 140,000 odd laptops and other products being about 45,000 odd. This was for the quarter ended, December 31st. The same for the 9 months is a number of 4,87,500 odd units, which is a breakup of about 3,58,000 laptops and others being 1,29,000 odd. The proportion being about 81% and 19 odd percent. In terms of revenue share, the same as the breakup is in terms of revenue. So long as it pertains to number of units, the breakup is about 76% and 24% for the quarter ended, and the same being 73% and 27% for the 9 months ended period.
And same period last share the 9-month data, the volume growth in the business?
Manish, sorry to interrupt, but your line wasn't clear. May I request you to please repeat your question?
I'm saying, what is the volume?
Sorry, sir, you're breaking up in between. We are not able to hear anything at the moment. Please check the
Whatever.
device.
Am I audible?
Yes, this is better. Please go ahead.
Am I audible? Am I audible?
Yes, you are audible, sir. Please go ahead.
Yes.
My question is, what is the total volume growth in 9 months? The volume growth in the business?
Volume growth has increased from 4,01,000 to 4,88,000 in terms of total units in the 9-month period.
Okay. At least, is there any impact of the labor code in our business? Because I have seen most of there is no provision. So there's no impact in our business?
No, there is no impact of labor code in our business.
And the last is the net debt figure because December 2025, sir. That's it for much. Thank you.
Yeah, the net debt number for 31st December is about average. The net debt is about 456 odd crores.
Yes, sir. Thank you.
Thank you. Our next question is from the line of Pritesh from Lucky Investments. Please go ahead.
Yeah, hello, sir. Sir, this rising inventory and memory prices, now is it a part of your margin or there is scope for further improvement in margin? Then, in your opening comments, you mentioned that there will be a continuously elevated inventory level. So, what should be then the interest cost assumption that one should take while forecasting? Because you initially had a plan of repayment of debt, but I think you have continuously maintained higher inventory. So maybe some thoughts there on the interest cost should be guided for. And third is, the distributor partnership that you're referring to. My guess is the number one and the number two names we know. So what happens to your revenue or volume growth incrementally based on these partnerships? Do we see acceleration from this 30% top line growth that you have guided for this year or otherwise? These are my three questions.
Thank you, Pritesh. Your first question was on the margin expansion. As you must have noted that we have revised upward our margin guidance for this year from 75 basis points to 150, 200 basis points. This is on the back of superior execution, long-tail to long-tail strategy. Also, strategic stock positioning. That elevated stock position, higher inventory is the need of the hour because we have to secure supplies in anticipation of demand. Prices are going to rise for an extended period of time, as we have seen, and there is no clear indication that this situation will abate anytime sooner. The AI investments are for real, and they are long-term. Around 7 trillion investments are going in data center and AI infrastructure across the world. We all know that we are using AI in our daily lives, and multiple AIs are being used for multiple tasks. While one search engine will give in a similar IP setting same result, the AI will give different set of queries in the same setting for different people. So personalized queries, personalized results require bigger processing, longer processing, and this will continue to grow. So that means we will have to keep higher inventory, and this strategic position of inventory is also going to help us in increasing our margins apart from stock positioning. Your question was around...
No, sir. So the first question, do you see margins further expanding from this 11.5? I'm taking 11.5 because I think you said 1.5 crore was extra warranty cost provided in the quarter, my guess is. So I'm just taking 11.5 as a reference. So do you see a case where these memory prices and, whatever price hikes that you're talking about takes up your margins further based on the inventory positioning that you take? So 11.5 rises further as we move next year. That's the assumption we should take.
Yeah, as a prudence, we have given, I would like to mention that we have again given conservative guidance, and we remain totally rooted in the business on the ground. We are on the job, and our goal is to increase margins. If your question is around, is there a possibility and we have the environment available for the same, the answer is positive. Yes.
Okay. So directionally, the margins can go up further. That's the conclusion. Okay.
Yeah, but I would like to be conservative at this point of time.
Okay. Okay, sir. Okay, sir.
Yeah.
Then on the interest cost side,
Things look good overall. The industry, yeah.
So on the interest cost side, do you see reduction, or do you see with the growth, the debt on your balance sheet continues to stay what it is?
Because of our the vendor network across the world, we are able to secure good quality of material that is required for refurbishment and sales. But during the current situation, it makes business sense to keep higher inventory, which require higher investment, hence the interest cost will be there and likely to be there. But this interest cost will be more than offset by the expanded margins. So we are mindful of that around 9-10% in per annum interest cost, the better margin realization is more than offsetting that interest cost. And you had asked the third question was around the distribution partnerships.
Distributor partnership and growth. So does it mean that you grow faster than this 30% now because of this distributor partnership?
Let me tell you this, 30% growth is not on the back of the new relationships that we have just announced. This will be on top of that.
That's what my question.
So, which means it can go up further. But as you know us, we always try to give conservative guidance.
Correct. Ajay was trying to answer on interest. So absolute interest is what it is when you grow, or absolute interest rises from this number, right? Yeah.
Sure. Hi, Satish. I'll address that question in detail, right? Last year, our total interest cost of finance cost was about 38.35 odd crores. In our Q2 guidance quarterly, we had indicated a total interest cost saving of about 10 to 12 crores for this year on account of the repayment. As the opportunity has unfolded, in Q3, our finance cost is about 9 crores, as against what we had estimated. It is higher by about 4.5 crores in this quarter. How has this played out? This has played out as basically we have had an EBITDA increase of about 22.57 odd crores, right? In the 3 months. So I'll rather focus on 3 months as against the 6 month period. So as against the 4 to 4.5 crores of incremental interest that we have paid, we've seen a significant enhancement in our EBITDA contribution. So we should look at it from that perspective. From an overall, for the full year perspective as well, as we mentioned that our inventories and working capital has been elevated on account of the overall opportunity that has been provided by the market. We anticipate that in the current quarter as well, interest levels are going to be, there won't be a reduction. But that having said, from where we stand, we anticipate that the full year finance cost will remain more or less same as was in the last financial year.
But when you grow on this particular... No, my question was when you grow on this base next year and maybe year after, so what happens to your debt and the interest cost?
So I think it would be important to highlight that, the industry is dynamic. The underground dynamics are quite positive at this point of time for us. I think we would want to be guarded in terms of how we take this forward, in terms of our inventory levels, in terms of our overall working capital, in terms of how our partnerships have scaled up, what they provide as an opportunity going forward. So we'll be guided. So the guidance also which Sharatji has given is for the current year, right? We would want to actually come back to the wider audience, including you, at the end of next quarter or at the end of the full year and give you a guidance for the full year as well. Please bear in mind that the markets have been increasingly dynamic and the opportunity is continuing to unfold, and that is a very live situation. Also, while Sharatji mentioned the aspect of monetary prices going up by almost 250 to 350%, this is actually a week over week. There's been a transformational change in terms of how memory prices have changed. And the way we would want to guide you on the growth going forward. We would want to restrain ourselves on giving guidance for the next year. At this point of time, we would want to address that at the end of next quarter. We want to see what has happened to the memory prices over the last. We have actually seen what has happened in the last 3 months. You actually see the results which have turned out to be way positive than what we ourselves have estimated. We would want to actually continue to perform and give you incremental guidance at the end of next quarter and full year.
Okay, sir. Thank you very much and all the best.
Thank you.
Thank you very much. Thank you, sir.
Thank you, Pratish.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Our next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah. Am I audible? Congratulations, sir, on good set of numbers. Sir, my question is more related to one data question. That is, how much is your gross debt? And second question relate to more of a memory prices. You had seen lot many years when the memory prices may be going up. You said that this time it is more sustainable and higher. So, what could be the factor which can influence these memory prices coming back to a normal level?
Sure, thanks. I'll address the first part of the question. I'll request Shadaji to address the second part of the question. The gross debt is 527 crores, and the net debt is the quarter end net debt is 466 crores. That's the first part of your answer to the first part of your question. Shadaji, over to you.
Yeah. Hi, Sunil. Your question around memory prices, I have seen in the past, but they were more event-based. Like in 1999, when earthquake happened in Taiwan, the memory prices went up. But when the situation stabilized and the production, the factories came back to shape, the memory prices came back to the normal levels. And this time across, it is more fundamental. It is driven by heavy AI investments. And that is not a bubble. That is AI we all are using. It is being used across the spectrum. It is being used in the organizations and in our day-to-day lives. So investments are going continuously there. And we have just spoken about memory. But the processing speed is not just function of memory. It is a function of storage and also the processors. Those are also likely to rise going forward. Secondly, when these prices will stabilize, obviously the enhanced demand will lead to enhanced production capacities. But this do not, as you now know, don't happen overnight. We see the memory prices coming back to shape by end of 2027. Yeah. But in this current situation, as we have seen, the brand new prices have already gone up by from 8th December to 7th of January. We have done the plotting. The brand new computer prices have gone up by 20% across the board, across the district. This is creating a bigger space for refurbished industry. Now, in case of meaningful computer, i-Core 3 sometime will not be available less than 35, 37,000 or 40,000 maybe. International market around $375. So anything less than 40,000 or 37,000 will be available in refurbished segment only. And in international, anything less than 375 will only come in refurbished. And we want to deliver a product which is like new and with a warranty. So we remain in a very, very good space to give an alternative solution to all kinds of customers. And we have seen that we are getting large orders of desktops and laptops from very large institutional customers across India and international markets.
Yeah. One more question related to you are experiencing very good growth at current point of time and maybe continuing in the coming period. But how about the capacity to meet this demand? Means, what are all your plans? You had not mentioned anything in your opening remark about the capacity expansion. So you have sufficient capacity?
We have sufficient capacity. We made public announcement some time back. We have taken more space in India and UAE, everywhere. And we are continue to hire skilled man side, skilled people. And we are working in advance for the business goals that we have. So capacity expansion is happening. We have now around 8 facilities in the UAE from 3 what we had earlier. And we have now taken one bigger facility adjacent to our existing facility in Mumbai, in Navi Mumbai. And we are increasing our space in the US market as well.
And I've already highlighted, Ajay, I've already highlighted the aspect around the manpower growth and the build out, which was about 1194 at the beginning of the year, which has gone to about 1900 odd. And a substantial part of this is in terms of engineers, which essentially leads to the operating performance being, the capacity being put in place for the growth that we have already achieved, as well as the future growth that we envisage.
Great, sir. Thank you very much.
Thank you. Our next question comes from the line of Atul Mehra from Motilal Oswal Asset Management. Please go ahead.
Yeah, hi sir. Good evening and congratulations on the result. Sir, my question is on working capital. Can you confirm the number of days of working capital that we have as of the quarter end, and how does it compare versus the same time last year and the previous quarter?
Yeah, sure. So, hi Atul, thanks for your question. So the working capital has been in line with, sorry, there's a lot of background noise. Yeah, thank you. So Atul, to your question on working capital days, the working capital days are in the 120 to 130 day odd range on an overall basis. There's actually been sequential quarter wise, there's actually been an improvement of a couple of days in the working capital cycle. And in terms of comparable quarter, it's been identical, right? So there's no out of whack this in terms of the number of days in terms of working capital on an overall basis, whether it be inventory or the overall working capital. It's in the 120 to 130 day odd range.
Got it. Thanks. That's helpful. Secondly, in terms of given the potential, and obviously we are tapping global markets. So in terms of like given the new distribution tie-ups, etc., that we have done, what is the potential to grow business in the next say 12 to 24 months time from the perspective of the balance sheet, and also if you can talk about any initiatives we are taking to reduce the working capital, because as the proportion of global business grows, maybe there is an opportunity to reduce working capital days. So maybe if you can talk about both these elements. Thank you.
So structurally, in terms of growth, meaning that remains robust. Our goals are very robust, and proposition and product and warranty has become even more relevant than it was 6 months ago. And in good from our execution standpoint, we have seen that even in the car market, the refurbished used car segment has grown significantly during this period and continues to grow. So our goal will be to continue to grow at similar or higher levels in coming years, coming quarters and coming years. With respect to our working capital question, in international and India market, the intensity of working capital is high at this point of time because of the situation. And it makes a lot of business sense to keep higher elevated levels of inventory for our margin expansion and servicing our customers. Another point to note is that we are converting people who are heretofore selling new computers, and there is a large amount of credit that is available in that segment. The people who provide the solution providers, value-added resellers, system integrators, and corporate resellers enjoy large credits on the brand new segment. Now, when we have to sell refurbished devices and they have to give it to further their corporates in India and international markets, obviously we cannot be less competitive because we are pushing. And this will have long-term advantages. It has to be seen more in terms of ROE and ROCE that will remain strong. Working capital intensity is very high in this business because there is no fixed capital or capital expenditure. That working capital or stock and AR is the main growth driver and business driver.
Absolutely. Thank you, sir. And then one final question is, as we approach Q4 in terms of dividend and capital returns, so is there any thought process or dividend policy that we have framed so far, or any thinking towards that?
We'll come back to you on this, Atul, and dividend policy and something. At this point of time, business requires fuel, and we remain fluid in this, and we will keep sharing our thoughts on this.
Sure, sir. Thank you very much, and wish you the very best. Thank you.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, in order that the management is able to address questions from all participants in the queue, you are requested to please limit yourselves to 2 questions only. You may rejoin the queue for follow-up questions. Our next question comes from the line of Nikhil Purohit from Fident Asset Management Company. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
Yes. Thanks for the opportunity and congrats on a great set of numbers. So firstly, so our average prices in laptops were around 27,000, and non-laptops were ranging from 18 to 22,000 based on the volumes and sales breakup of the past 3 quarters. So considering the steep rise that has happened in SSDs and RAMs, could you tell us the any revised average prices for the 2 segments?
Yeah, sure. So for this quarter, our average selling price for ASP for laptops is almost 28,800 odd rupees. Now the same in the previous quarter was about 1,000 rupees lower. So there's been an enhancement of almost 1,000 odd rupees. The same thing if you look at other than laptops, that enhancement has moved from about 17,900 to about 18,200. The same number, if you were to compare on a 9-month basis also, there's been almost 1,000 odd rupee jump in terms of the realization. It's important to look at, I would want to highlight that this number should be looked at in terms of what's the underlying configuration, right? But I'm giving a sense on an overall basis. So on an overall basis, including laptops and others, our average realization is about 26,200 for the quarter, which was about 25,200 in the corresponding quarter. So we have actually seen the richness or goodness realized as well. I think that may be worth highlighting.
Got it. But Ajay, what I'm trying to understand is if our prices ramp, they're up, but then I thought about the number. But are we completely passing on the prices to the customers, or how is it working? What I realized, I think Sharadji mentioned that by FY27 end, we are expecting the prices to the increase in cost to sustain. So how are we going to pass on these prices to the customers, and how do you see volume getting impacted because of this these elevated prices?
In terms of pricing being passed on to the customer, obviously our pricing is on the old prices, and we are getting advantage of the climate where the prices have gone up in case of brand new, and the current used inventory is coming at higher prices. So our margin has increased. That's number one. Second, your question was around how do we see the growth coming in due to the elevated prices, if I understood it correctly. I think it's a very positive development for us because the brand new computer prices have increased. Also, I mentioned before that around 25% market, 20-25% is unorganized market, not covered by top 5 brands, where even availability, not only the price, even availability of memory is an issue. So overall supply is going down and the prices are going up. That creates a huge scope and space for us to sell the product. So people will be buying more refurbished devices. Anything not less than $370 or $400 will not be available in brand new segment. In India, a meaningful computer will not be available less than 37,000-40,000 rupees. And we are seeing that playing out in the last 45 days. We are keeping a very close track on these brand new prices. This is giving us much bigger space. Even the institutions in India and across India have started buying refurbished devices, which they were not buying it earlier. So it's a net very, very positive development for us.
Understood, sir. Thanks. And so,
sorry to interrupt, Nikhil. We request you to please rejoin the queue if you have any further questions.
Sure.
Thank you. Our next question comes from the line of Nitin Shah, an individual investor. Please go ahead.
Yes, thank you. Am I audible?
You are audible, sir. You may proceed.
Yeah. So thank you for giving the opportunity. So I would like to know, like, percentage-wise, what will be the volumes geography-wise? Like, we have facility in India, we have 3 facilities in Sharjah and 1 facility in US. So what will the percentage of products from each of these geography?
From international market, our major markets are from our UAE, major markets are US and Europe. They totally contribute around 40% US, 40% Europe, and 20% is Middle East. The primary product segments are obviously laptops and desktops.
And who would be a
This is just to highlight.
Yeah, please.
Sorry, just to highlight, the proportion that Sharji mentioned is of our international business.
Okay.
Right? And to your subsequent question, which I believe was in terms of, sorry, I'll not want to guess that. Why don't you repeat your question?
Yeah. The overall product-wise, I mean, from where does it contribute? Which territory? I mean, India, US, or UAE?
As Sharji mentioned, 40% of our sales of international sales is in the US, 40% in the European region, and 20% in the Middle Eastern region.
No, which facility caters? I mean, which is the largest facility?
So the largest facility, as Sharaji mentioned, we have enhanced our facility is the UAE. Everything that happens internationally gets processed in the UAE, right? So all the international operations, you should look at it that almost a substantial part of it is in the UAE, followed by India.
How much would that contribute in terms of percentage?
So if you look at our international proportion is about almost 60% of our total revenues. So broadly, that should give you a guidance.
Okay. UAE would contribute 60% of the total sales, is it?
International would contribute 60%. Okay. India is about 40%. India is about 40%.
No, I understood in terms of sales. I'm talking in terms of geography-wise. Which is contributing the most? Is it the UAE facility? Is it the US facility?
UAE facility. Yes. You are right. Yes, it is.
Yeah. And who would be a comparable?
Sir, sorry to interrupt. We request you to please rejoin the queue if you have further questions.
Sure. It was the first question itself only which was repeated. Fine, not an issue.
All right. Thank you, sir. Our next question comes from the line of Ajay Nandalwal, an individual investor. Please go ahead.
Thank you for the opportunity and congrats on a great quarter. I have a couple of questions. In this environment with higher memory prices and higher new laptop prices, how is the availability and cost of what we procure? How is that changing?
The availability, because of our relationships, we are able to procure material because we buy from plethora of customers, which are like leasing companies, corporates, IT asset disposition partners, recyclers. So we continue to get good supplies, and we are taking steps proactively to secure large supplies, and that is leading to elevated stock positions. At this point of time, we are still enjoying pricing advantages. But the broad trend is on the rising side. But we are a step ahead of the same. So we are buying stock ahead of price increases at every level.
Understood. So second question on the realizations, right? So you said the end market laptop price increase are higher by around 20%. How does that translate into, like, what's the sensitivity of new laptop prices versus your ability to price? And how do you think of the trade-off between price versus volume?
No, good question. Because IDC has also estimated if the prices increase on the brand new side, there is an expectation that companies and people will defer their purchases. That will lead to the demand shift coming in favor of refurbished devices. So for our case, we remain even more competitive when compared to brand new computers. And since we are an organized player, we give an experience which is like equal to new and with warranty, reliable warranty. And that is why large distributors in India internationally have joined with us, is on the back of credibility. They will not join with anybody else because they also have their reputation to protect. So it's a very, very good upside, good tailwinds available for us. The refurbished segment per se will grow, and we intend to grow faster than the refurbished segment growth.
Understood. So, sir, am I correct in, if I hear you right, are you saying that you want to drive higher volumes and not necessarily use the opportunity to get higher margins? Like you're much more driven by volumes or margins.
No. We are saying we are going to try both higher volumes and higher margins. We are not going to compromise margin. We are not going to encounter a situation where we have to compress our margin to deliver numbers.
So you're not going to compress your margin, but right now you're making like 5,400 rupees per device, and from aggregating over.
I couldn't hear you, sir.
Right now your gross margins are around 5,400 rupees per device. Now, obviously the end laptop prices new laptop prices are increasing by probably 10,000 rupees, $100 or more. So how is, so that opens up more. Is the market competitive? Are there like competitive pricing where there's pricing limit? Or I'm just trying to understand that part. Like there's clearly a demand pull because of what's happening. Does that give you slightly higher pricing power, or you choose to exercise it? Just give some color on that.
It does. So we will have to choose the right mix between growth and margin both, and we intend to drive both volume and margin growth.
Understood. So just one last question. ITAD, any updates on the ITAD's business?
See, we are mostly in the refurbishment segment where we procure and give product. Well, it's just not a product. It's a warranty and a service and a commitment that the product is reliable and works for good 3 years. So that's a promise that we give. ITAD is just one portion of recycling business, refurbishment business. But we want to remain on the refurbishment piece where we think we have a very clear advantage and distinct positioning.
Thank you. Participants are requested to please limit yourselves to one question only. Our next question is from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
Sir, in this scenario, where no sales for new laptops will, some of the customers will defer. In terms of us having, do we see a scenario where we would see something similar playing out in our suppliers and our sourcing as well, where, there may be a situation that reduced supply is available to us in terms of procurement?
See, we buy from very large range of suppliers and across the world. So we are hedging ourselves against a situation where the deferment of new computer sales can lead to lower disposition, but we are protecting us from buying more and from long list of suppliers. That's very number one, and that is why we are keeping elevated stock.
Okay. So last, what was your, you said in Q3 FY26, your volume was 1,86,000. What was the same number in Q3 FY25?
Sorry, in Q3 FY25, it was 1,43,000.
Okay. And why were your margins so low in Q4 FY25, almost 6.8%? Was there any one-off in that?
The last quarter is always, there's always a trade-off between revenue, margin and volume, right? So it's a function. So we need to, a lot of purchases happen in the last quarter. There are pricing dynamics, etc. that play. So we also are in the growth business, right? So we at times want to, there's always a compromise between volume and growth. Right, so we take a call on that basis. But that having said, I think this time I would just want to limit myself to say that hopefully this time we should have a better proposition given the specific backdrop which we've discussed at length, especially.
Okay, thanks a lot, sir. Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to Mr. Sharad Khandelwal for closing comments. Over to you, sir.
Thank you all very much for joining this call. This has been very exciting time after our IPO, and the situation, we have had good execution across the world. We have enhanced our team, we have enhanced our customers, and as you can see for yourself, the large distributors are joining hands with us, and we are honored by that. The situation is very, very positive for us. This is a good tailwind that is available with us, and we are on our toes and want to take full advantage of the same. We do not see any compression of margin like last year in the Q4 this year because of better execution and better environment. And this business is very exciting business, going to grow. It has a both product element as well as service element and very strong credibility. So that presents a very high barriers of entry. We are not channel dependent. We are not country or geography dependent. And our company, we are quite humbled by the fact that we started in India and we thought this proposition is valid across the world. And we had the audacity to go to the US and European market, which not many people did. And we are thankful to the God that it has got good validation, and we continue to build more upon the same. Thank you all very much. Thank you for joining this call. Really appreciate it.
Thank you. On behalf of GNG Electronics Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.